but you might get some profit taking. So here we are right now. We're trying to get a double top, and we're breaking out above it, and we're right at that target. And we got vacuumed up there, so we may pull back. I mean, I'm very confident that we're going to pull back on Tuesday or Wednesday next week, and I'm very confident that we'll reach the moving average, probably by Wednesday. We can get there by going sideways like this, above the moving average, go sideways, or we can get there by going down. This is so strong, we'll probably get there by going mostly sideways. Profit taking going into the weekend. A trading range late in the bull trend, so a possible final flag. Can you sell below 78 if it closes on its low? I can't because, I'm starting to talk at 1 o'clock. If I were not talking, would I short it? No, I don't think so. Too strong a bull trend, not a lot of profit potential. Extremely good day for the bulls. Now, how much higher do we go? I think we're going higher. I think we're going to pull back next week. It may be just for a day or two, it may be just 30 or 40 points, but I think we have to get down to the 60-minute moving average. This is unusual. It's 69 bars without touching the moving average, and that's a very long stretch. I don't remember the last time we've had that many bars above the moving average without a pullback, so we're probably not going to get many more. And therefore, on Tuesday or Wednesday, we should get there. We can get there by going down or by going sideways. And daily chart, similar logic. It's a streak. It's a sign of very strong bulls, 11 bars without a pullback or 11 bar bull microchannel. But it's also extreme, and therefore we should get a pullback, if not only one day. Here, 1 day pullback. But when we resumed up, we only went up a little bit. I've been comparing this rally to this for a couple of weeks now, and I think it's going to do this over the next several weeks. It's possible that it'll do that, and we'll get a sharper sell-up, but I think we're going to stop going up next week and start to go sideways, possibly down, but unlikely to go very far down. We've been, originally I had the trend line drawn over here, then here, then here, and then we tested it here, and so we may get up there, and it looks like around 44.50 or something like that. Do I still think we're going to get a 15%, 20% correction this year? Yes. And the reason for that is the weekly chart. This is an unusual number of bars in a small pullback bull trend. It's more than 60. And normally a small pullback bull trend has a big pullback, and then it stops being a small pullback bull trend, and you enter a trading range. And that a big pullback has to be bigger than all the small ones. This small pullback was 10%, so we should get a pullback that's bigger than 10%, maybe 15 or 20%. And that's what I think is coming. Maybe this summer, I don't know, but sometime this year, I think the small pullback bull trend will convert into a trading range, and that means it'll have a bigger pullback, more than that, and last longer than 2 months. August, September, October is the time of the year when the market often has a pullback. Today, it was really pretty interesting. We had a gap up to a new all-time high, and we had a micro double bottom and a breakout, bad follow-through, and through the first 20 bars, we were trending up, but barely. It was basically a tight trading range. And then through here, I said that the bears have a wedge top, 5, 12, and 21, and that we might break above it and get a measure move up. And we did break above it, and we did get a measure move up. normally you get a couple legs down. We just got one leg down and then one leg sideways, and then we broke above that. So then you had to wonder, are we going to get a measured move up from there? Which we did. We had an extremely strong breakout, 37, 38, 39. Probably looking at a couple legs up. By climax 43, we had a by climax 41, a pause, and a second one. That usually leads to a couple legs down, and it just led to a couple small sideways legs. Bulls tried to resume, but we had a wedge, 1, 2, 3, and a higher high double top. It's a higher high major trend reversal, but I said that when you have this many bars without touching the moving average, once you have 50 or more bars not touching the moving average, the odds are when it touches the moving average, you're going to get a new high of the day. I said that 99.9% chance we'd touch the moving average, 99.5% chance we would get 3 bars, at least 3 bars with lows below the moving average. And then we'd try to get a new high, which is what we did. And I said that the market may reach all the way up there. I said the market often tends to, I just want to check something here. Okay. I said sometimes the market reaches the furthest target that you can imagine, even though it looks like it's unimaginable. And today's an example. For traders today, it's kind of like 2 days. It was a weak bull trend, weak bull trend through 21, and then it got moderately stronger here. And I also said that between 21 and 31, there were 0 bear bars. I said even though the trend was not strong, no bear bars, and that's buying pressure and often leads to another breakout. And that's what happened here. This is pretty much like 2 different days. We had a pretty ordinary day here, and I said the bulls will try to get an upside breakout above the wedge top, and the market could accelerate up and become very strong. So if the bears do not get a decent wedge reversal, then you got to be thinking we may break out of the upside. And that's what we started to do in 24. I said 25 was the minimum that the bulls needed. Okay, I said the bulls needed no bear bar. So if we had a perfect doji, that would increase the chances of going higher. And that's what we had. And the bears tried to reverse down 28, but bull bar 29. At one point it was a bear bar, but then closed on the high. And I said it was buying pressure, and it increases the chances that we could start to accelerate up, which we did. A blow off top 30, but 10 bars, 11 bars without a bear body, probably a minor reversal. And it was 2 legs sideways, so down, bounce, and then sideways, 35, 36. And then a surprisingly strong breakout, 36, 37, 38. Or 37, 38, 39. So it looks like we're going higher. From a trader's perspective, the first trade that I think traders could consider is possibly buying above the bull surprise 4. I think it's not all that good. I thought the first reasonably good trade was buying above 16. And then, at that point you can argue, it's a pullback. It's a higher low. And it's a bull bar closing near its high. And we're in a small pullback bull trend. So sideways to down for a few bars, but the pullback is still fairly small. So buying above 16, 17 closing on its high, buy above 17, not great, top of a trading range. Breakout to new high 21, but big tail. I said the bulls might try another breakout within a few bars, and I would not sell below 21 despite a wedge with 5 and 12. It has a bull body, and it's a small pullback bull trend. So bulls would buy above 22, above 25, above 27, maybe above 24, and then 28, 29. As far as selling below the II-31, I would not. I think we might get a couple legs sideways to down, but it might be more sideways. And the trend is so strong, I think we'll try to test the 30 high, so I don't think we're going down that far. Some bulls bought above 34, some above 36. Others waited for the breakout. They want higher probability. They buy above 37 or 38. And from there, it's just buy the close all the way up. We have a pause, a small of our 42. You can call this a parabolic wedge, 39, and then a small of our 40. a bigger bar 41 and a smaller bar 42. So on some smaller time frame chart, this is probably a parabolic wedge. 1, pause, 2, pause, 3. For me, on this chart, it's a buy climax, a pause, and a second leg up. 60% of the time when you get a strong buy climax, you're going to get at least a small second leg up. But 60% of the time, you're going to get a couple legs sideways to down, either after the first buy climax or the second. And that's what we got. On smaller time frame, this might be an expanding triangle. Some bulls would buy above 50, higher probability probably buying above 54, and then 58. I think at that point we're going higher, but not much higher. I think we have to get down to the moving average. If it goes above 58, then it might be a third leg up, wedge 51, 56. And therefore, if you're buying above 58, you have to be swing trading because the probability is low that we're going to go very far up. We have a wedge rally to a double top, a higher high double top. We should get a correction. Couple legs sideways to down to the moving average. I'm 99.99% certain we're going to get there. We can get there by going down, which we did, or sideways. And if you're aggressive, you might be able to make a point or two selling. But if you want higher probability, you're going to look to buy. Once it gets down to the moving average, look to buy above the bull bar closing near its high. Not 66, but maybe 67. Micro double bottom, micro triple bottom, and then breakout 69. The bear is trying to get a wedge reversal. Breakout 68. The bear is trying to get a wedge top 69, but a bear doji, and then inside bar 70. Inside bar. Sorry. That's not what I want to do. Inside bar 70, II 71, but if you buy above 71, your stop is below 70, the bottom of the II. That's too small, so I would risk at least a couple ticks below 70 if you take that buy, because small stops usually get hit. And then you can see 74 went down to sweep out the weak bears, but it held above the 69 low, held above the 67 low. Outside up, looks like we're going to try to get up to that measured move target, which we did. And then once there, I said there would be bulls taking profits there, and that's what happened. We got strong profit taking at the close. Limit order traders, what do? Well, on a small pullback bull trend, if you're trading with limit orders, it's better to only buy. The bears have a low 2 top, 8 and 6, but a bad sell signal bar. Really not much to buy there. Could you buy below the IOI 13? Not really. Better to buy below a bull bar. Maybe you buy below 25, a little doji, and then you get this buy climax here, so it's not a great buy below 32. So really not much limit order buying. It was all buy the market, buy the close, buy above the high of the bar. And that was all the way up here. Here, if you're aggressive, you can buy with limit orders. You buy below 48, place a limit order to buy at the moving average. That you got filled over here. And can you sell with limit orders up here? You could probably sell above 43, expecting it to go down to the moving average or sideways to the moving average. But if you take the trade, it's probably good to use a wide stop, like 5 points or more, and scale in higher. And you can see traders bought the moving average, the tail 64, and then bull bar 66, another bull bar 67, and then up to the close. This looks like a pretty climactic move. Whenever you have a buy climax day like today, the next day, tomorrow, which is Tuesday, 75% chance you're going to have at least a couple hours of sideways to down trading, starting by the end of the second hour. It's possible that it already began right here. So, but Tuesday we should come down here at a minimum, and 60-minute chart on Tuesday or Wednesday, we should reach the 60-minute moving average. There'll be buyers down there, just like there were buyers on the 5-minute chart. When you're above the moving average for 50 bars and you pull back, you're probably going to new high. So when we're above the moving average here for more than 50 bars, right now it's 69 bars. When we get to the moving average, there'll be buyers. But when we get there, it could be a pretty dramatic profit taking. You know, we may come down and close that gap, for example. We may test 4,300, for example. So I think the character of the market is going to change next week. Also, for several weeks, I've been saying that between June 26th and July 5th, it's one of the most reliably bullish times of the year. Well, this is the end of it, right? It's possible we could get another day or two, but we're at the end of a very bullish time. That does not mean we then enter a bearish time. It just means we no longer are in a very bullish time, and we could start to go sideways. And I think we are going to go sideways. Here's the daily chart. We're racing up. You know, we may go a little bit higher, but we'll probably transition into this kind of a thing: pull back, new high, pull back, new high. Sometime next week, we'll probably start to convert from a very strong bull trend into a channel, a weaker bull trend. Question: did you sell below 44? Did not, or below 62 for a test of moving average. I ain't shorting with stops on a day that looks like this. And so when I'm selling, I'm going to do it rarely, and I'm going to do it with a limit order or a market order. So I did not sell below 62. When we were above 44, I hit sell the market, and I scalped out with 1 point. So most traders cannot do that, right? If it went up 2 or 3 points, would you have sold more? I would have. Why would I have? Because I know the math. But if you don't know the math and you don't trust the math, what you see is this, and you're afraid, oh my gosh, I sold this high and it's doing this, I'm going to get killed, right? It's not going to do that. You know, I know the math. So until you're confident about the math, it's really difficult to do that kind of a thing. When you see a day like this, it's much easier to just look to buy. And, and if you're afraid, just take the Forrest Gump trade. Every time there's a bull bar closing there, it's high, you just buy above it. And, that's what I was doing through here, buying above 16. I remember all the ones, 16, 22. Here I bought late, so maybe above 38 or 38, 39, somewhere up in there. Here, I think I bought 54. I sold 43 high. And here, 68, I bought for a scalp, and then I did not trade in here. So I'm just looking. The Forrest Gump trade, you don't need a high IQ to trade a day like this. Once it started to accelerate up, it was probably going to be a big bull trend day. And just look for any bar closing near its high, and you just place a stop to buy 1 tick above it, and then put a stop either below the bar or below the bottom of the most recent little breakout. So if you buy above 28 or 29, stop below 28 or below 26, minor high or low, and go to Walmart, come back in a couple of hours, and say, my gosh, I'm smart, I made 10 points. A question: I saw bars 30 to 36 as a pullback. 30 to 36, it was a sideways correction. But thinking I needed to pull back to the moving average before buying, I should not have been concerned about touching the moving average that early in the day. Well, so the question is, this is a buy climax. Are we going to pull back to the moving average here? So the question is, when you see this, should you not buy until after it pulls back to the moving average, or can you go ahead and buy? Well, buy climax, we should get a couple legs sideways to down, and this may be sideways, so 1 leg down, resumption up, and then a 2nd leg sideways. So, you can either buy at that point, or you can wait for 1 or 2 bars here and then start to buy again. In general, most days, 80% of days, will touch the moving average before 50 bars. All right, maybe even more than 80%. And therefore, in general, it's okay if you're looking to buy to wait for a pullback to the moving average. But when you start to see a day that is starting to convert from a weak bull trend into a strong bull trend, and it's still a small pullback bull trend, a buy the close bull trend, rather than waiting to buy or a pullback, I'd rather buy on strength. Every time you get a bull bar closing near its high, it's a buy. If you want, you can buy and scalp out, buy and scalp out, buy and scalp out. But most traders are better off just buying, and if they're able to, it goes up 5 points and you get another buy signal, buy more, and then use it, move up the stop from the first buy. So I would, on the day, my point is when the bull trend is fairly strong, instead of worrying about buying pullbacks so the risk is less, it's usually better just to look for a bull bar closing near its high. You don't want a bigger bull bar. You don't want to be buying above a big bull bar late in a trend. But in general, most of the bull bars you can buy. But here I would not buy above that. It did not go above that. But 41, 42, 43 is, 42 is a pause in a buy climax, so we're probably not going up much higher, maybe a bar or two. So I would not buy above 42. Okay, question, what trading metric should somebody record to evaluate their performance and then how to improve? Well, the first one is an obvious one. Are you making money, right? So that's the first one. And if you're not making money, how many days are you losing? Or on a given day, what percentage of the trades are you losing? Are you losing on 60% of the trades, 80% of the trades? If so, you're taking far too many bad trades, and you're exiting too early on good trades, and you're exiting too late on bad trades. So first thing is to look at winning percentage. And second is you got to be looking, are you selling when the day looks like today? When the market's above the moving average in a small pullback bull trend? Are you doing dumb things? If you're doing dumb things, you got to get rid of dumb things. So before you even starting to do some statistical analysis, you got to make sure that the trades you're taking make sense. And if you're not making money, what you should be doing is entering with stops and swing trading. Buying above 16, buying above 22, 28, 29, 34, or 37, 38, 39. And just buying above a bull bar as the trend is starting to resume, and just try to take good trades and try to swing trade. And assuming you're swing trading, and you're swing trading in a trend, not trying to swing trade in a trading range, if the market looks like this, you don't want to swing trade. Maybe swing trade here, but a lot of the past few days, the swing trading was not very good. It was mostly a sideways market. So the more sideways it is, it's better off not to do anything until it starts to trend and then swing trade. So are you trading in a way where you have a reasonable chance of making money? Are you swing trading in a trend, entering with stops and holding until the trend stops? If it's yes to all of that, then you probably are making money. Your winning percent is probably at least 40%. And those would be the numbers I would be most concerned about. Are you making money consistently? Are you winning at least 40% of the time? And is your average win twice your average loss? Those would be the numbers I'd worry about. And as far as other things, there are all kinds of statistical analysis that you can do. You can look up books or articles on trade management, Sharpe ratio. There are a whole bunch of mathematical things. That is, I think, fine if you're already very successful and you want to see if you're more successful than other successful traders. But the person starting out, just keep things simple. Am I making money? Am I losing money? Are my wins on average twice as big as my losses? Am I winning at least 40% of the time? Okay. If it's all yes, 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 then you could start looking at all kinds of other ways to analyze your performance. There are mathematical formulas, but most traders don't bother with that. Most traders are just going to say, am I making money consistently? Are my wins, significantly bigger than my losers? Am I winning at least 40% of the time? And, I don't think you have to think beyond that. All right. Hope everybody has a good 3-day weekend. The market's closed on Monday. The E-minis probably open for a few hours in the morning, but there might be one little move up or down. And what will happen on Tuesday is we'll see Monday. So on Tuesday, there'll be, whatever, 30 bars, 40 bars for Monday. But then a couple hours into Tuesday, those bars will be gone. TradeStation will remove them. So when we start the day, we'll see the bars. And then around, 2 hours into the day, the bars will be gone. And on the daily chart, we'll see a bar for Monday. So on Tuesday, we'll see a bar on the daily chart. But 2 hours into the day, if you refresh your data, that bar will disappear. So Monday's trading is insignificant, and I think there's very little money to be made. So I would wait for Tuesday. So hope everybody has a good weekend.